All right, episode 141. Today we're talking about real estate, the Fed, adjustable rate mortgages, and with that, is it 2008 all over again? We're going to get started right now.
Plus the volume from my phone. Okay, we're going to start the show differently. Nick does not get to intro immediately. This might be the old guy in me. So if people don't know, I am easily the oldest person on the podcast, and I think this might be my old cassette tape and CD tape listening to mind, because music is very ADD now. I hate the fact that our intro ends just like a hard stop. I hate it. It drives me crazy. Everybody else thinks it's fine. I love it. And it might be the fact that I also hate like how like Tyler, the Creator, makes a song, and it's two different songs in one song. Like, it's just two completely different beats. It makes no sense. And so I might be an old guy, so I need everybody to chime in the content section. For the intro, does it need to fade out, or does it need hard /stop?
Okay, so let me ask you.
I mean, it fades to an end.
It does fade to an end.
I don't hear it.
What's your favorite real song that ends with a hard stop?
I don't know. I probably couldn't think of it. It would probably be something relatively new.
It's whatever Asher listens to. There's this one song that he's like, first off, every time he listens, he's like, why is this song so relaxing?
Your 5-year-old says that?
Yes, if Heather's listening to this, I need to know what song that is.
I can totally see him doing that.
He's like, every time he's like, this song, what makes it so relaxing, Dad? And I'm like,
the fact that you're fucking 5, you should be relaxed all the time.
Yeah.
You got no problems yet.
Yeah. So, all right, episode 141. Look, we're going to be talking, of course, real estate, because this is the only real estate podcast worth listening to. The Fed, what they did today and how that's going to potentially impact. It didn't impact stock market, but potentially impact the real estate market here in the coming weeks and months, and adjustable rate mortgages. So are we looking and going back in time to see what happened in 2008 so that we can determine, where this train is headed? So first time listening, you need to go support our sponsors, right? Armadillo Home Warranty. The Ron is our Armadillo Home Warranty rep, the best Armadillo Home Warranty rep out there. So go to armadillo.one/tour. If you're, look, when it comes to picking a home warranty, like, there's a lot of options out there. I'm going to tell you why I like Armadillo. One, and the only one, is if I want to, I can choose my own contractor. I don't have to use the crappy ones that the other home warranty companies are using, because they're also beating them up on prices. They come over, they do duct tape work, and then it's broken in a couple more months.
Boo that man.
Yes.
Who does that?
So armadillo.one/tour. Tell them that we sent you over there, as well as go to mortgagemikeoftexas.com, our favorite lender here in Texas and the Dallas-Fort Worth area. So Mortgage Mike of Texas, ask him for that big old Mortgage Mike stamp of approval. And last but not least, Homeward DFW, the property management company of Dallas-Fort Worth.
It's
the
growing.
Unofficial official.
The only.
Yeah, it's the unofficial official. It's growing like a weed too. We really appreciate all the referrals, man. We've been blessed to take care of a lot of people this past few months or so, and it's been awesome.
You wanted to say years.
I was going to say years. I was going to say
felt like
decades.
years. Yeah.
It felt like years.
Ever since we were born, we're ready to take care of their.
We just made a new hire for the property management company. More leverage. So
I want to call her Leah. You call her Leia.
She calls herself Lay, and I think that
you're both just fucking wrong. So we just figured out.
I don't know if that's just her name or if she's just crazy self-righteous.
Yeah.
Like one of those people, like her name looks like Kristen, but it's like Kirsten, and you're like, you're just an idiot.
Yeah.
I just don't like.
Yeah. God. Love it.
I'm so bad she's going to go back and watch this.
Yeah. So
fireballs.
Yeah,
She actually edits the podcast, so this will be freaking great.
Love it. By the way, the Fed made a big announcement today that no one was expecting, by the way.
Nope. Didn't see it coming.
And they raised interest rates. They raised their rates.
Okay.
Surprised, shocked. Now, let me honestly, I've been a little preoccupied. We had an amazing Good to Great live event last week.
Yeah.
Go
So
back
much
to
fun.
episode 140 to listen to Nick Krem, who's dropped some amazing video content or strategies on there.
He busted my mind open, dude. We actually, when we were hanging out at dinner later, like that's Look, I'll tell you guys, you want to get a lot of free information, start your own podcast and have people on, then just ask them shit.
You just get to go to dinner after.
The coolest thing about having your own podcast, like we've had Dave Andrews, like we've had like people on here, Tariq El Musa, like we've had people on here. If you have a podcast, you just get to ask your own questions.
Yeah, you guys don't realize, like, those guests don't go away right after the show ends. Like, we get to sit and ask whatever we want. It's amazing. You also try it. Start a podcast.
Yeah. So I sat down with Nick at dinner, and I was just talking to him about the main thing. And it was one of the things that I thought was really great was I got to see how many things we were kind of already doing that were pointed in the right direction, which was really cool. Just sometimes confirmation from somebody that you're doing the right thing feels really good. But also, he really dialed me in on something that I hadn't been doing very well. And in the message side of things, Brian talks a lot about the 4 core tenets of what my life are when we're talking about some of the vlog stuff we were doing, but I wasn't dialed into what I thought my message would be from a consistency standpoint on social media and video. And I think one of the really difficult things for agents to do is to find what that message is, because they're just throwing stuff out there. And what Krem was suggesting is far beyond like it's not just making reels and posting stuff. Like his ideas around how to craft your message and how to ask for stuff, because a lot of the message I have is trying to come from contribution, but I'm also really uncomfortable asking for something in return, and I think it almost sometimes devalues what you're asking for. So we had a really amazing conversation, and I'm definitely going to do some more with it.
I mean, we're already doing it. I brought him on over the next 4 months to really help mentor me on that. So we'll see. You'll see.
I'll just watch what you're doing and rip
just
that
do
shit
it.
off.
Yeah, just do it. That's what we talked about anyway.
what
Share
we do.
Netflix passwords.
That's what we do.
Yeah, episode 140. Go listen to that. And look, there's a lot of content that you could be making right now. By the way, the keynote speaker we had last of the Good to Great, billionaire. Billionaire
You've
with a
been
B.
talking about him for a while, and in typical Matt fashion, I just kind of was like in one ear out the other. But then sitting there with him, and again, you get a different version of these people off stage too, and listening to him talk to you, and just being a fly on the wall. I didn't say a damn word.
Yeah.
It was pretty impressive to sit across from somebody like that.
So
He's a super chill dude. Chill dude.
Whoa,
What did I
Super
just say?
dill chewed.
What in the world? Good Lord.
Super
Market.
dills.
Wow.
Yes.
Market.
8 minutes.
super chill.
Brian.
Here's your Friday e-break of the week.
Yeah, super chill.
He was a super chill dude.
Coming from contribution, just
Always.
and so just be on the lookout. We're going to do more of those. I really want those Good to Great live events to be part of our podcast and everything else. That look, I did this and you know, my surprise. Luckily, Brian showed up.
This is my first.
Because my surprise was I wanted Brian to be on that leadership panel. I didn't ask him originally. I wanted to actually bring him up while on stage, because originally the leadership panel was going to be myself, Chauncey, and Justin Nelson.
Yeah.
And so I was like, you know, I don't want this to be about me. And I was going to call you up on stage, but I needed to make sure that you were...
From the cheap seats comes in a hot shot.
Oh God, that was a stunner. I love it. Anyway,
I mean, it was my event. It's my party.
You wrote checks, bro. Good.
that was good.
And
Anyway.
so, you know, Brian got to come up there and share. And look, this is all I got to do this with the people that I love, and we support each other's businesses. And so that dude, there's going to be a lot more of those.
I had a blast, man, and you put on an amazing event, dude. That space was amazing. We had
awesome.
an incredible
Yeah.
turnout, dude. So I'm just
Seriously.
incredibly proud of you for what you put on.
Yeah.
It was so much fun, dude.
So let's talk about the Fed increase, right? So they increased the rate by half a point.
half a point, which on the surface might not sound like a lot, and that is the biggest one-go rate hike since 2000, 22 years. Isn't it weird how 2000 doesn't seem like a long time ago?
No.
You want to play this game? What was the game we were playing the other day?
Michael Jordan playing
yes.
baseball.
But we did a different one. This is
The lunar landing.
We did that, but there was
Backstreet
another
Boys.
one with that we're close to now. So we're gonna do this. Oh yeah, it's the Backstreet Boys'
Yeah.
first album. So we're gonna do this. We are currently at this point in time. Michael Jordan leaving the NBA to play baseball is closer to the moon landing than it is to today. And at this time next year, the release of the Backstreet Boys' first album will be closer to the moon landing than it is to today.
Ugh,
That doesn't feel good at all.
that doesn't make sense.
My college girlfriend, I felt like they were doing a bit, but her and her friends loved the Backstreet Boys, like at a weirdly older age.
I want to laugh at that, but I think they have some killer songs. Yeah. I just have no. I'm gonna tell you right now. I was a weird kid that I didn't care about being made fun of because I was a fighter. That's why.
Backstreet Boys are awesome.
Yeah.
No, they're not. They suck. Fuck you.
Yeah, I kind of just didn't give a shit like what people had thought about my appreciate. I didn't love them. I wasn't like going to shows. I think the Backstreet Boys got some good songs, man. I don't bother me at all.
First concert ever. New Kids on the Block.
Yes.
Dang.
Great band, bro. Fucking great band. Nothing wrong with it, dude.
You guys are music people. I'm not. I'm gonna sit back.
What was
and
your first concert?
I think I went to
seminar.
It was like Edge seminar. I think I went to
Tony Robbins.
yeah. I think I went to like one of the Edge Fest.
Okay, that sounds pretty.
I couldn't tell you. Maybe Red Hot Chili Peppers was there.
That's actually
respectable.
Edge
Yeah.
Fest was solid in the early aughts and 90s.
So-
Anyway, first like half point one go rate hike since 2000. And that sounds so crazy on the surface. So what happened? The market got thrown into chaos. Everything came collapsing and falling down. Or
The world's ending.
no, fucking Nasdaq's up over 3%. We're up 15 minutes past the close. Where did we end up, Jesse?
Just about to grab that.
It's at least 2.5% we ended up. Okay, Nasdaq ended up 3.125 up.
So here's the cool thing about this,
Welcome
right?
to America, where everything's made up and the points don't matter.
That's right. So the cool thing about this is that if the Fed can actually get inflation under control, here's what ends up happening. Here's what happens that's great for the real estate market towards the last half of the year, maybe rolling into 2023, is that mortgage interest rates actually don't keep going up, right?
Yeah.
And so there have been all over predictions that if the Fed cannot get their rate under control, Mortgage Mike was like throwing out some projections of 7 to 8% rates. Yeah. And if this actually helps and takes a bite out of that, then what we end up seeing is we kind of stay where we're at, maybe even drop by a point and get back into the fours. Yeah. And so the idea and understanding is what we really need to do and have strategies, and I think we've talked about this before, little snippets of little golden nuggets, or what Nick Krem said, pro tip.
Pro tip.
What are you supposed to say? When
Show me the money.
Show me the money. So Krem says, like, Nick Krem was like, hey, when I say pro tip, everyone yells, show me the money.
Jerry Maguire.
Right? And from that, the little pro tip is, guess what? If we think rates are going to drop because we think that the Fed is getting inflation under control, then one concern that some buyers are going to have is, should I wait till the end of the year to buy?
Well, okay, so let's keep talking about that. But to frame this conversation, Jesse, in the background, can you pull up two things for me while we're talking about this?
Yes.
The current Fed rate, because I actually don't even know what it is right now because
It's half a point higher.
Thank you. Can you actually just give me...
Which is the highest raise since 2000.
Exactly. So just pull up current Fed rate.
I watched this show.
And then can you just Google, like, average difference between Fed rates and mortgage rates? So anyway,
yes, and so the conversations that we've been looking at it having is saying, look, guys, yeah, do you want to get a lower rate? Sure, we all do, right? But if you can buy now, the lagging indicator is home prices. Home prices are not going to slow down just because the interest rate's going up, right? That's like trying to stop a car that's going 120 miles an hour. It can't just stop on a dime.
Right.
And so there's going to be that runway of home prices of still continuing to rise. So you get in now, 5.5, whatever it's going to be. And when rates drop, guess what you get to do? Refinance. And your home is worth more money than it was if you were to have waited till getting that 4% rate or whatever it's going to be in the next 6 to 12 months.
And not anticipating. There is a possibility that if with a recession coming, that these rates, while we think they probably are going to hold tight for a little bit, that they could come back down end of the year, early next year.
Yes. No, 100%.
Yeah, that's actually what I'm trying to figure out right now. That's why I was having Google these couple of things. I spoke about this at our team meeting yesterday. The reason that I wanted to see the average difference between the Fed rate and mortgage rates kind of over time is because that's what I was alluding to when you have a massive rate hike, one-day rate hike, the highest in 22 years, and then the market rockets north. What I mean by that is I mentioned this to me the other day. There's three things that really affect mortgage rates. It's Fed rates, it's speculation around Fed rates, and then it's the correction around the speculation around Fed rates. If that's not confusing enough for you, right? Like,
So it's a giant circle jerk.
Okay, so the market has had, the Nasdaq's had its worst start to any year ever in recorded history, and April was its worst month since 2008. Now, the correction in the Nasdaq, especially, it was way overbought because tech stocks were just flying during the pandemic. But in the markets in general, the correction started during the hawkish announcement around the Fed raising rates 4 times this year. That was back in February. They got really serious about raising rates 4 times this year, and the market just started to crumble a little bit, right? They hadn't even raised rates yet. So that is a reaction to speculation around the Fed actually raising rates. Then what will happen is the Fed will actually raise rates. So the Fed raised rates like a couple quarters, like they did 2 rate hikes already before this, or 1 rate hike, like 0.25%.
I think it's 2.
Yeah, 2.25% rate hikes. I think I might be getting that wrong, but smaller rate hikes. They did 2 smaller rate hikes, and that accelerated the little bit of the crumbling of the market, right? And so you have speculation raises interest rates. You have or mortgage rates. You have actual rate hikes, which raise mortgage rates, and then you have the correction to the speculation, which could affect rates, right? And it also affects the market. Right now, you're seeing the correction to the actual speculation. That was literally the headline that Jesse just pulled up. This is the most bananas headline. It was like markets head north or whatever, like markets rise on Powell's indication, that is Federal Reserve Chairman Jerome Powell. Keep going down. Jesse, we were by that Tesla before. Keep going. Dow soars 932 points, NASDAQ 3%, as Fed's Powell signals soft landing. That is just a fancy way of saying they actually raised rates and the market went, okay, we over-speculated, we're fine, let's continue buying. Like, we do this thing where rates are actually affected way more by the idea of rate hikes than by actual rate hikes themselves.
Don't we do this in everything, though? Don't we run out of gas when people get scared?
Yeah.
Like,
or countries saying, hey.
Hurricane Harvey, bro. We're going to run out of gas. Let's all get gas, so we run out of gas.
My happy ass
Y2K.
waited for 20 cars at Costco to get gas that day. Yeah. You know what I mean? I was
you were
right
part
there.
of the problem and protecting yourself from the problem at the same time. It's a fucking Pavlov's dog situation.
Protecting yourself from the situation is, I think most people are not the irrational people. Most people are like, I know it's going to be okay, but I have to hedge my bets against the nut jobs who's going to go fill up 17 cars full of gas.
That is a perfect way to describe all of these bouts of irrational exuberance. 90% of the people are just trying to beat the crazy people to the gas pump. That is just the perfect way to describe it. It's over speculation, and most people are just trying to hedge the over speculation that's going to fuck everybody, but then in turn fucks everybody.
Yeah.
It's like just the craziest thing.
So the good news is that if they were already prepared for it. It's like a country saying, hey, on this day I'm going to launch a missile, and I'm going to do it over here, and it's going to it's precision, so it's going to land right where I'm telling you it's going to land, and we're going to do it at 12 p.m. Central Time.
I'm going to yell 5,000 or mystery box.
Yes, and so when they actually do it, no one dies because everyone was evacuated. Yeah. And it's the same thing as this. Is the soft landing means that it
means you've already eaten your giant plate of shit in this.
Yes.
And now you can relax because we're going to coast in at the end, right?
So
like
from
rip the parachute in the final second.
From the real estate side of things is having to navigate where a lot of people don't understand this. Like the average consumer and the average real estate agent, unfortunately, does not understand this. So they think Fed increases by 0.5 point immediately. They think mortgage rates are going to go up by at least 0.5, if not by a full percentage point. Yeah. And that's probably not going to be the case. We'll have to get with Mortgage Mike on that one to see where we land.
It's possible rates come down. That's why I was trying to look at the difference between like average Fed rates and average mortgage rates. It's possible they could actually come down. So I'll put it to you this way. I don't think rates are going to go to 8%. They're also not going back to 3% anytime soon. So just get used to probably a few years at least of mid 5% to maybe low 6% mortgage rates. There's nothing wrong with that. That's pretty standard, actually. So let's just wrap our minds around that and start to have and understand these conversations get easier every day because people get used to their new reality, right? Where I think we kind of get into the next chapter of this is when comparing this situation with rocketing prices and rocketing demand and all that type of stuff to maybe the collapse of 2008, what I think people are starting to look at right now and get a little concerned about, which I think we should dive into, is ARMs have picked up significantly since the beginning of the year.
And what are ARMs?
ARMs are adjustable rate mortgages.
And why are they bad, Brian?
What did
Guns.
I don't think
What
that,
did
no, they're
Debacker
not
call
bad.
them?
First off, they're
I
not
know.
bad.
Here's the thing is, I will tell you this, but I want to speak to this a little bit because I think this is how most people have heard about ARM loans, right? I didn't become a realtor until 2012. There have just not been a reason for me in my residential career for me to do many adjustable rate mortgage loans. And what I heard about 2008, when it was 2008 and I was still a lowly bartender, not knowing anything about real estate, was that ARM loans were bad. And I believe there are people who 14 years ago heard about ARM loans and they still think ARM loans are the worst thing in the world.
We need to have a sounder for the mortgage mic.
Just like
Breaking in, he's like almost like if for the video side of this, where he's breaking through glass with his big stamp of approval.
We need to do like the ticket does. We just need to get him making a weird sound because that would be way more on brand for this show. And every time we reference something, it's just Mortgage Mike. We need to record him playing Call of Duty sometime where he's just is like,
Guys.
and then every time we talk about financing, we just play a weird Mortgage Mike
So
sound.
I'm going
mortgage.
to tell y'all right now.
Hold on. Don't tell me right now.
Don't
MortgageMikeOfTexas.com just said, with the Fed increasing rates, where did mortgage rates go? They got better by 69
basis points.
I think he just wanted to send that.
Yeah,
69 basis points.
All right, so
They got
I don't want to say I
better.
have a crystal white claw over here, but I just said I think they might get fucking better. It's almost like I read books and shit. I am going to tell you something now. Now that you're texting Debacker and he's watching, I hold in my possession, and I am going to release it at some point on this show
Blackmail.
without his consent.
Uh-oh.
The funniest. Here's what happens when Debacker bails early at the bar, and I just get to hang out with him and Elizabeth Austin and his wife. His wife sent me the funniest video of Debacker you will ever see in your entire life, and I will explain the context when
I don't
it's
think
time.
I've ever seen this video.
And when I explain the context, you will love it. Our viewers will love it. He'll probably even have a laugh after he gets over his shame and embarrassment. But she's chiming in. It is. See, I was going to just drop it on him, Crystal, but I felt like I would just kind of prime the pump a little bit. This might not even get released for months or years. I have no idea. But it's going to be so perfectly placed. It's going to be like we all just won the Super Bowl because we were a part of it. I'll show you guys after the show because it's fantastic. But just keep that in mind, viewers at home. It's coming, and it's going to be ridiculously funny.
All right. So adjustable rate mortgages have increased.
And Nate. We were hanging out with Nate. I'm sorry,
Nate
buddy.
Dogg.
Sorry, Nate.
ARMs.
Yeah, we're back.
Whoa, that was weird.
I think that was just in house. I think it was just in house.
Yep. Adjustable rate mortgages have the demand for those have increased, and so and Brian and I think we were on a group text not too long ago. We were talking with Debacker about this of saying, as rates go up, what is our strategies to help our clients, right? And something that we had thrown out there is 40-year mortgages, which just Force's mind just exploded on the 40-year mortgage.
I don't like reactive products to economic, problems. I don't like the idea that they're like, hey, you might not be able to pay this in 30 years. Why don't we just string it out a little longer? That's not a reasonable reaction.
That's how we ended up in 6-year car notes.
That's what I'm saying. It's not a reasonable. The idea that you can't afford something in 30 years, so let's just give you an extra decade.
Hey, that 6-year car note made you money.
The bank loves that. Yeah, no shit.
Because do you guys understand why that's a problem? Because you're not building enough equity to then sell in the normal 5 to 7 year cycle, right? So it really fucks prices in the future.
But the problem is you also said in the normal 5 to 7 year cycle, which the average homeowners actually past now staying the 5 to 7 year cycle. So
where is that? Because that ain't here.
I don't think it's here either. Maybe that's nationwide. You're right. Regardless of what the timeline is.
Since the recession, people have started staying in their homes longer.
I believe that.
And
I believe it too.
That happened here too. We're just not experiencing that as much because we're prices
certified badasses.
with that too, but prices shot up through the roof.
Sure.
And so people were ready to eject early. They were ready. People don't want to stay in their home longer than that 7 year period. They just were because there wasn't as much equity gain.
Right.
to then go put it into the next house to then satisfy where they want their payment to be.
Agreed 100%. And yes, whatever your reasoning or the baseline is, all I'm saying is 40-year loans still extend the amount of extends your timeline, which reduces the amount of equity you're gaining in your house every year.
I support 40-year loans for first-time home buyers.
Okay. Elaborate. Tell me about that.
Because number one is the first-time home buyer demographic, and I'm going to go with typically that's going to trend line to a little younger demographic, right? So maybe mid-20s, maybe up to the early 30s, right? Yeah. Now we do have I've had some 50-year-olds that were first-time home buyers, and we love them as well. But we need to still create an avenue for building wealth. And if a 40-year mortgage is the number one way that the average American builds wealth here in the United States is through their primary residence home. Mm-hmm. So for a 40-year mortgage, it should only be for first-time home buyers so that they can get out of that rental cycle, because that is a cycle that it's hard to break once you're in it. And so 40-year mortgages for first-time home buyers so that they can start building wealth, and hopefully that appreciation gain over time allows them to either refinance into better products, and or there's enough that they can transfer that into a move-up home.
It's a really compelling argument.
How does that?
I can see that.
Well, and I actually like that a lot, because it's one of the things that when I do Christina Smallhorn's show, her one of the main things that she touts is affordability of homes. She does believe home ownership is becoming so much more difficult for the average American than it's ever been before, and she equates that to the hedge fund buyers and all these people coming in and just buying up large amounts of property and then turning us into rental society.
Can I add something to my?
Back to that, because I do want to talk.
Can I
about
add
that.
something to my political campaign for this?
Fantastic.
Is that 40-year mortgages at a lower rate for first-time home buyers only?
Sure.
So they get a reduced interest rate.
Yeah.
That allows them to continue. That it makes it affordable, because look, prices arenn't going to fall.
It's
sorry,
better
guys.
than FHA.
Yeah, I want that to be because FHA is not a first-time home buyer product at any they're.
No, it's not. I'm just saying it was designed as one, and it's mostly utilized by them. But I don't think it's like an advantage. It was designed to give people. Yeah, so like
it was designed to do. It was the
I
first
agree with
step
what
of
you're saying.
You
Yeah,
guys are talking about. It was designed to take, because here's the barrier to home ownership. It's typically not monthly rents. It's the ability to put 10 or 15 grand together in most scenarios. It's typically, most people are already paying the month. Like Brian told me the other day, they've already hardened themselves to the habit of paying that amount of money every month. It's the ability to get that difference in the bank account in order to make the purchase in the first place.
Absolutely.
Which is why 3% came along.
So, well, yes. And so like if someone could get a 3%, like an FHA style down payment, and maybe they can even roll closing costs, there needs to be a strategy. And look, if you look, there's people that are going to abuse it. That's fine. Let the small percentage of people abuse that portion. But there has to be a strategies to re-engage first-time home buyers. Who I'm in this Reddit group, the first-time home buyer Reddit group. I'm going to tell you the amount of people complaining, the amount of people that are saying they've given up is high.
I have a friend on Facebook who actually came in my Facebook world from a thing I did in 2015 where I gave away Thanksgiving Day tickets to Cowboys Redskins. He is not using me as a real estate agent, which is a whole other goddamn topic. But
you want those tickets back, by the way.
It's not even that. He didn't win them. But he came into my world through that. But my point being is I saw him make a post the other day, and his post was, it was a little bit misled in the sense that he was referencing California buyers in Texas, which we've already covered that topic. But he was referencing skyrocketing home prices, which is 100% what's happening. And the entire thread, I didn't even jump in there because I didn't want to get mauled, but the entire thread is people who are in full agreement with him. The reality is, as real estate agents, consumers, you need to understand that consumers very much think that homes are overpriced, whether they are or not, whether it's a correction or whatever. There is a large contingent of people who think that homes are overpriced, and they're just going to wait for it to come back down. And if you don't understand or have the tools to have that conversation with people, you're at a huge disadvantage, because you're not able to. I didn't jump in there because I felt like I had the answer, but I also felt like they would look at my bio and see was a real estate agent and then just tear my ass apart. And the reality is the majority of that conversation was mega uninformed. And I know that was another real estate agent who was telling that guy what the market was like. And I'm like, dude, there's a totally different way you can approach this, but there's no I feel like I do this sometimes when we talk about this stuff. As a real estate agent, you need to be skilled enough to show your clients alternative conversations and alternative ways for them to attack markets like this. If it is just MLS, go show, write, over, offer, you're going to have your client posting stuff on Facebook like that. Because I will tell you, I have guys very much in this price point who are attacking this market in a completely different way. And while not having success on the very first contract, they're not out there posting on Facebook that it's an impossible market and California is fucking them over.
Yeah.
Right?
Yep.
100% true. And I think that one of the biggest things to pick up out of that entire conversation, your opinion of the market doesn't matter, and nobody's opinion of the market matters. Everyone's opinion of the market matters. And what I mean by that is that's called market sentiment. Whether or not we think home prices are too high, if a lot of people think home prices are too high, then home prices are going to be too high. That's how the market works, right? And so I think we just need to be aware of that, around the conversations that we're having with our buyers. And just the general supply and demand of the market, honestly, because market sentiment is what affects everything.
No. It ties in the mortgage conversation.
Yeah.
Like I said, as a real estate agent, we are leading the conversation in this, and we do have the ability with kindness and understanding and care to be able to explain this to people. And we're allowing... Look, we can't affect everybody and talk to every single person, otherwise we'd all have the most amazing businesses ever. But when we contribute to the narrative that because interest rates went up 0.5% in a single day, that the entire, it's the sky is falling and little chickens running around. If we are that little chicken in this narrative, we are fundamentally hurting ourselves as an industry just by being uneducated. And that fucking pisses me off.
How many people do you think, regular people and real estate agents, only saw that the Fed raised rates 0.5 point today and didn't see that mortgage rates probably came down in most places and didn't see that the market actually went up?
Real estate agents don't know this.
I know, isn't that
weird? They're not studying it. They're only looking at the headlines. They're not going to do the research. Are you telling me
real estate agents aren't that good at what they do a lot of times?
Ruh-roh.
That's what you said. I didn't.
Oh, man.
Here's the thing, man. We haven't thrown out some Prodigy smack it up in a while. Like, the reality is here's the facts. What is it, 86% of people are out of this business in 24 months? If you don't want to be part of that 84 to 86% of real estate agents, just educate yourself. There's not a huge barrier to jumping into the top 16% other than just a lot of understanding about what you're talking about, which in turn will make you have easier conversations, which will make lead generation not feel as difficult, which will make not everybody feel like a stranger, which will make a lot of conversations feel like they're more organic. Your whole business changes by becoming knowledgeable and understanding of what's actively going on right now, not what was happening even 30 days ago, right?
1,000%, dude. Like, this is why we spend so much time in our team meetings and things like this, just talking markets, talking education, talking about the conversations you need to be having with your prospects. I say this all the time. The biggest thing that holds people back, the number one thing that separates ordinary from extraordinary people, is a lack of confidence. And I extrapolated that yesterday in a longer diatribe about time management and how you can get more reps if you don't waste time and you can gain more experience and things like that. But I do believe that is the number one barrier between ordinary and extraordinary people is lack of confidence. If you want to have more confidence in the way that you're talking to your prospects, learn about the markets.
From the show.
Educate yourself. So watch this show. Watch every episode. There's actually more than 141. You don't know that there's some secret bootleg episodes. No, I just say that to say, like, this is what's, quite frankly, this is what stops us from lead generating. This is what stops us from pressing forward. I'm not kidding. If you knew that you were really, 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 really good at what you did and people would be lucky to have you as an advisor, you would lead generate more. And I fundamentally believe that to my core. And the reason that I think a lot of people don't hit their goals is not necessarily laziness. It's lack of confidence, which stifles their ability to just take massive action. So be an expert.
I also think, though,
or at least be interested. I'm not even an expert. I'm just a guy, but I'm interested.
And Theron kind of sparked me on this thought process with one of his comments in there. When people like to voice their opinions on certain things that are going on, agents like to voice their opinions instead of taking the fiduciary, the fact side of things, where we talk about adjustable rate mortgages, and immediately a lot of real estate agents are like, no, that is bad for the consumer. That should be gone. And they're just projecting their opinion based on what happened in 2008, thinking that was 100% of the reason. And honestly, adjustable rate mortgages can be a great strategy.
Let's go back to that.
Yes.
Like, So and I'm sorry, I didn't mean to cut you off, but we finally circled back to this after we introduced it. What is the difference between adjustable rate mortgages now as opposed to, the collapse? And why do we just have this scary taboo around adjustable rate mortgages?
I would assume, number one, that on the adjustable rate mortgages, now you're getting me to do it, back in 2008, is that you probably also combine that with the fact that you could get one with a ninja loan, the no income, no job, no assets.
And a ninja lived in your house.
That's right. And look, you have no income. You're not paying the loan in the first place. You have no job. You've got no income coming in. And then if you have no assets, then you've got nothing to tie it to when they foreclose on the property. So I would say that arm versus this arm are two. That's like two different. Those are two different. That's apples and oranges.
Like two different arms.
They're two different arms, but
DeBecker had a different name for it the other day when he came and spoke to us.
I can't remember what it was, and Jesse and I were just texting about this. I can't remember what it was.
DeBecker, if you're listening,
how he pronounced maybe arms.
No, it was like a totally different acronym.
Completely different name.
This I don't have a better example. This is gonna be like the most morbid example I've ever used on the show.
Oh God,
we're Mac Miller.
Get ready to drop.
No. This is
drop
really good. Mac Miller died of a fentanyl overdose, right? And the dude that was his dealer.
Oh, I heard about this.
He didn't he get arrested?
Yes.
He got arrested.
He's the baseball player, right?
Yeah.
Yeah.
Mac Miller.
I don't know who that is.
Okay.
No,
Mac
Miller's
Miller's
a rapper.
He's a rapper.
You're thinking of the Angels pitcher.
Yes.
Yeah.
That too.
That was in Southlake. That was
I
here.
know. Yeah.
But no, Mac Miller is a rapist.
Bringing it back to freaking music that I have no clue on.
Bring it back to music.
So his dealer got arrested, right?
Yeah, he got a long time in jail too.
And what was crazy about that is he wasn't a drug dealer.
Nope.
He was Mac Miller's really good friend that wanted to make sure that if Mac Miller was going to continue to do drugs, that he just got really good stuff and didn't just buy stuff from regular drug dealers. So he was basically a liaison between drug dealers and his best friend Mac Miller. And then when he failed at his job, now he's spending 11 years in prison.
Correct.
Which is really sad. And I only say that to say I get it's a morbid example. What I mean by that is it wasn't arms that caused the Great Recession. It was horrible lending standards, fraudulent ratings companies, synthetic CDOs, a million other things. But the only headline remember is don't take out adjustable rate mortgages, right? Blame the drug dealers, not Mac Miller's best friend. They were arms can be fine as long as you qualify. Yes. If we have high qualifying standards. Now, I know that I don't know the exact ins and outs of how the qualifications have changed. I know that you don't have ninja loans anymore, and DeBacker's saying you've got to qualify for the maximum rate.
Correct.
On your adjustable rate,
yes.
right? That right there says you have to qualify for the payment that you would make at the highest possible adjusted rate. That right there is a stark difference between now and the rates that were being made, or the loans that were made in 2001, 2002, which adjusted in 2006.
So let me ask a actionable question for agents out there who may not know. Who is the type of person who may benefit and or want an adjustable rate mortgage?
Ooh. I would venture to say, and this is what I looked at in the past, is someone who has a budding career that, maybe a doctor who pretty much knows that their income's going up. I would venture to say that a business, I've seen business owners do it at a high level. Look, I would also say that an arm is there's always a little bit extra variable, a little bit extra risk in there, right?
Sure.
I mean, we're all not guaranteed to make it tomorrow anyway. So if we took out a 30-year note, there's some risk that I can't pay it back.
Ain't gonna be my problem,
right?
no more.
Right? Or if something were to happen that God forbid we can't go sell real estate tomorrow because we got hurt, we got whatever. I mean, I can't, whether it was an arm or a 30-year or 15-year or whatever it's going to be, interest only. And I can't pay it back, it still gets foreclosed on, right? The bank still gets it.
The people that should be that it would be a prime candidate for an adjustable rate is anybody who could afford the maximum rate but doesn't want to pay the current prime rate, right?
Correct.
If you're telling me that for X amount of years I can pay a lower rate than the prime rate, and worst case scenario I have to pay this maximum rate, but I can still afford that, now I get to make a decision. Do I want to roll the dice and hope that in 5 years I can refinance to get a lower rate? And if I don't, I already know what my worst case scenario is, and I can afford that too. That's a lot of people. And you can also move before the adjustment.
I was talking to my dad about this the other day. They actually have an ARM on their current house.
Okay.
And the reason why he did that is because he knew that his rate was going to be better and he was going to be able to pay it off prior to the higher rate kicking in.
And he knows his income and he knows his worst case scenario.
Yeah.
That's what led, if you want to understand really what led to the financial collapse of 2006 to 2009, people not understanding the worst case scenario. Plain and simple. And I mean that across the board, meaning people on, like, I'm talking servicers, investment banks, AIG super didn't understand their worst case scenario, right? Like across the effing board, it was a fundamental lack of understanding what your worst case scenario
But would you
is.
venture, again, I get that, and that, would you also...
I don't think it was being presented to those people like
Wasn't
that.
being
It was being
presented-
presented
No,
to like our bartender
that-
friends who
no,
are
no,
like,
no.
I know you're only asking for $250, but we can get you in at $400.
Actually, let me. I don't mean to interrupt you, but actually, that's what I mean by across the board.
Yeah.
It's not just the buyers that were given bunk loans. Those people, you would expect them not to understand their worst case scenario because they're buying their first house. They're just happy to get a loan.
Yeah.
They're excited about the future. I'm talking about seasoned investment bankers not understanding the worst case scenario of buying billions and trillions of can't do it today. Trillions of dollars of mortgage-backed securities without thinking for a second, what if these people can't afford these loans in 5 years? Like, not
they
on
made money
talk
that
about.
day.
No, they didn't
didn't-
give a fuck.
no,
though.
they don't
They were
care.
making too much money.
No,
with it.
Cashing out.
That's called future Brian problems.
That
and
is so-
today
that is
Brian
super
doesn't
true.
care because today Brian's making
That
money,
is
but
just
future
not
Brian
giving a shit about your 6 a.m. meeting. You just did a line of coke and we're in Vegas, so it's just whatever, bro.
It's 3:30. We'll
It's
be
just
fine. It's
whatever,
gonna
bro.
happen.
Yeah. So from that is again, from if we're going to compare everything to 2008 to today's standard, the number one thing is back then they did not have skin in the game, right? So you could get an ARM, and even with the rates, it wasn't the ARMs that caused the problem. By the way, it was not the ARMs.
standards.
It was the standards. It was no skin in the game. You didn't have a job. Who cares? You're approved. You know, you don't have any money. You know what? Even better, we're going to give you 120% for a loan for that house. You know, we can actually build. You're going to make income on this loan because we're just going to give you all of it. You want 200%? Boom, you got it. Because the money was flowing, it wasn't stopping, and they just were hoping that the hot potato didn't land on with them and blow up with them.
Okay, so we get to look back on these things and laugh about them. Like, how did they not see this coming? Where are our blind spots right now in this market? Because we keep saying this is not 2008. I fundamentally believe that. Where are our blind spots in this market right now?
The number one blind spot that I'm seeing is where I'm concerned with is that job with the way the job and lack of wage increase is happening, and then you still factor in inflation, that the consumer is going to still withhold these big purchases. And I'm one of them. I am the again, I've been talking about this for years. I am the person that should have bought that move up house.
Yep.
3 years ago when I found one at $625,000. Now that home is worth 1.1 or 1.2 million. Can I go afford that? Abso-freaking-lutely. Do I want to? No, I don't. So I'm Debbie, I disagree with you. I don't think buyers are going to be upside down in 2 years.
I mean, I wish that we had that counter argument because I've heard that a lot.
Yeah.
I would love to explore that. If anybody can elaborate on
Jesse,
why,
see if you can pull
prices, on the why people would be upside down.
See if you can pull up the average down payment right now, because if buyers within 2 years are going to be upside down, that means that home prices are going to have to fall much further than the average down payment, which is not, again, it's not happening. It's like It's like here in Texas when you do foundation work, and foundation work on a slab house is where you go around the perimeter and you put either steel or concrete piers underneath. Right, the average down payment on a house right now is 12%, according to the National Association of Realtors, and these are now let's break it. Let's go down a little bit further. That's the average. Buyers between 22 and 30 is on average are putting down 6%. From age 31 to 40, it's 10%, and then it goes up from there. 41 to 55, it's 13%.
Even the lowest number at 6% would be catastrophic if your house dropped 6% in value.
So
right?
what was the average price decrease nationwide during the Great Recession?
Right around 10%. I think
it was right around 10%.
So right around 10%. So the young buyers, which they're the ones that are down 4%. I'm going to tell you, so they're upside down, but they still have a job because right now with the demand in jobs, even with a recession, there's still going to actually be job demand there. You can't actually get rid of enough job demand to wipe that all away.
There's just 330 million people that need stuff.
Yes.
At the end of the day, right? Like,
I agree 1,000%. I'm just trying to see what the maximum was during the recession. I just don't see it, man. I don't see people being upside down. Let me tell you, because here's what we do. I won't say that it's all sunshine and rainbows. I'm very much a cynic. On any personality test, you'll see how much I'm always looking for the downside. I don't see people being upside down. What I do see is this. We have this fundamental belief that institutional buyers are turning North America, the United States, into a renter society. That is not true across the board. And the thing that we were just looking at a second ago is actually a great indication. The average down payment increased by age demographic like exponentially. Like it was 23% for people over 60 or something like that. It was like a lot, right? Yeah, 23% for 18% for people over
retirement
55.
age 23%.
Yeah, that's what I'm saying. Like people are putting more down.
Who's buying a new house from 95 and
So
95?
I will tell you right now, my parents
Are they getting a 40-year mortgage?
My,
They did
pa- my,
20%.
my parents have have this guy renting their house who's 91, 92.
Yeah.
And he's telling he wants to go buy a house.
I
And I'm
do
like,
want a quick
"Bro."
sidebar. Okay, so the fair housing, is that discrimination? You can't discriminate against age, right?
Yeah, I
think
got
that's
to
right.
imagine that's included in there.
Can you not do that as a lender?
What?
Like if I'm 115 years old and I try to take out a 30-year mortgage, can I not be like, hey, I don't know?
Think about this though.
I
Does it just?
I know it's mean, but I don't know how that works.
Does it just
Like-
let's take a more realistic age. 85. Doesn't the situation either work itself out? At 85, you either have a bunch of money
Yeah.
and are doing okay, or you're probably somewhere like I don't know if there's a lot of in between.
If you try to ask for a 5% down conventional and you're 85, can I at least ask if you're a smoker? Like, am I allowed to just vet this a little bit, bro? Like, what a weird thing. We can't ask those.
Yeah.
I don't know. I'm not saying you should. I just it's
But
curiosity.
Debbie,
of
where
mine.
I see like, maybe the young buyers where they're upside down. I don't see it as much in this one because, like I said, the repair and a foundation analogy. When you put piers underneath a foundation, whether it's concrete or steel piers right underneath, your foundation's going to sink back down to where those piers are. Right? Yeah. Maybe it sinks a tad bit lower because the piers are they're gonna settle. But you're not going back to your house is not falling in because of that foundation work. It's the same thing here with as much down payment that's happening. The average is 12%. Yeah. So unless we're seeing 15 to 20% value decreases, which is absolutely insane.
I think some of the perception that we're having too is the run up that we've had for the last 10 years, right? It feels like people are selling their homes faster. Because I will admit, if you buy a home in this market and then call me in 18 months and say, Matt, I want to sell my house and I want to make a bunch of money on it, I'll be like, hey, it's probably not going to happen unless this thing keeps running, which nobody anticipates is going to. I think what a lot of real estate agents tend to have, or maybe not real estate agents, just what a lot of people tend to think is they're just thinking that small little micro amount of time. But in reality, they're going to be in the house for 5 or 7 years, and they're going to be able to weather most storms. But I agree, don't buy a house in this market and expect to sell it in a year and a half when you bought it at top of the market as your personal residence and expect to cash out on it, right?
By the way, the government wants that to happen because they get capital gains tax.
They do.
Yes.
The government wants you to sell really fast.
So how much money is the government making off of this real estate run-up?
That's actually a really good point. So let me agree with Debbie here for a second, and I'm going to pay the counter argument. I do see a scenario in which prices drop. So we are absolutely in an institutional market in some senses, from the premise that institutional buyers have become a much more prominent figure in the market with low rates for the last couple of years or so, buying up everything, right? Entire neighborhoods being built just for rent, right? The premise that I could see where prices do decrease is, here's what happens. As the lowest couple of rungs of the income totem pole in America can no longer afford housing because prices are too high, they are forced to rent. As rates continue to tick up a little bit or even settle where they are, institutional buyers are going to need to push rents. It enhances their cash flow, and if you can't afford a home, you're forced to pay rent. If you're forced to buy a product that I am selling, I get to set the price. So rents will increase. Now, that is essentially towing a fine line. This is basically the Federal Reserve's job. The Federal Reserve's job is to set rates so they play the fine line between inflation and deflation at any given time. With institutional buyers owning trillions and trillions of dollars of assets, they're playing the fine line between raising rates enough to maximize profits and raising rents enough to maximize profits, and raising rents too much that people can't afford rents, and then they will not be able to afford the product that the institutional investor is selling. And so we could get into a situation where, as prices continue to increase and rents continue to increase, property taxes increase to a point where it is no longer viable for institutional buyers to hang on to the assets that they have for so long. They have made their cash flow, and now they are going to liquidate. And even if they liquidate at a lower price than market value, they are still taking a gain, and they've had the enhanced cash flow for a decade or however long, like in my theoretical timeline. And then what happens is you get a market flooded with below market value inventory, and the everyday seller who lives there gets screwed because BlackRock or any other institutional buyer is now liquidating all of their assets. They've had a great run. They're going to go back to cash, and they're going to wait for the next cycle. And now anybody looking to sell in that little half-decade period is going to take a loss. There is absolutely a scenario in which prices do decrease. Whether or not we see it or not, I have no idea. What I will say is this. If you are in the market to purchase a home or working with buyers, this is the conversation to have with them. We, as a society, are not turning to a rental society. The couple lowest rungs on the totem pole income-wise may turn into a rental demographic. If you don't have assets now, institutional buying is taking over a big subset of the market, and they do want to push rents, maximize cash flow. And that is feeding a big portion of rising sales prices. And so if you don't get assets now, there is a very, very big demographic of people in America that may be renters forever. And I do see that scenario, Debbie, where I think that's the only way this plays out. It won't happen tomorrow, though. That might be 10, 15 years from now.
Was
that confusing
I
enough,
missed
you guys?
It. Can you actually repeat that?
I'll just
just say the whole thing.
All right, so
All right, Bob.
a hedge fund, here's how it works.
Welcome to the show.
No,
Which, by the way, Debbie from west of Boston. Thanks for tuning in.
Thank you for tuning in.
West of Boston,
Actually,
that's
you know,
legit, dude.
you know who Debbie is. She is a friend of mine. Remember the South Lake listing? That is a referral from Debbie.
Stanhope?
Nice.
That is a referral from Debbie.
Man.
Debbie.
1230 Stanhope is a referral from Debbie.
That's
Boyd.
right. Because
That's awesome.
they moved to Boston.
They moved out there.
Y'all hang out, Debbie?
Uh-huh.
That's awesome.
Debbie's
Guess
awesome.
we'll find
Yeah.
out.
Now, look, everything you said, I do agree. I do agree that scenario could happen. And look, I think that there's another time and place for us to also talk about the way property taxes are headed. So if you're in a state that doesn't have state income tax, and a lot of state income tax, there's pros and cons to state income tax states. The downside to a non-state income tax state is our property taxes are higher, and there is going to be, especially in Texas, there's going to be a changing of that guard in the not so distant future. There's actually two that you can go vote on. There's two.
What is it? Yeah.
Two legislations on right now that can help you. It doesn't save homeowners that much money in the long run. It's like a couple $100, but
What are property taxes? Why am I paying these?
Because you don't pay state income
schools.
taxes.
Yeah.
Why am I paying state income taxes?
Hospitals.
They go to schools, the state.
Brian eats bell peppers and has no kids, so he's like, fuck taxes.
So
Yeah.
Taxes.
No. That is not true.
That isn't true.
I do not dislike taxes. I dislike waste, and I dislike
Kids.
lack of accountability.
But do you know what he
If
does
I
like?
moved to like Amsterdam and paid fucking 80% in taxes, but everything was amazing, I would gladly pay that. I'd be like, you guys know more than I do. You're chill as fuck. Take my money, make my life better. Go move to fucking LA County and ask how your money is being spent, and then ask if you like taxes. We always talk about the ideas like we should pay more in taxes. Who the fuck is managing that money? A bunch of goons. It doesn't know. I dislike lack of accountability.
Brian, do you know who's not a bunch of goons? Armadillo Home Warranty.
Not at
true.
all.
Armadillo.1/tour. Just go over there. You left me so many times. I'm like,
Masterful.
yeah.
So masterful.
Armadillo.1/tour. If you don't want the non-goons of the home warranty.
That's right.
If you want goons, then
There's
go to
no
the other
goons.
ones. But check with Theron over there.
Goon free.
Goon free. He's got the best home warranty. He's slanging warranties left and right. He's just slanging them. He'll slide in your DM, he'll just show up to your meeting unannounced, and he'll give you a home warranty. You a home warranty. Everyone gets a home warranty.
Everyone gets
because it's not your father's home warranty.
He's
It
got
is
like
not.
the Rob base of fanny packs too.
He does.
His fanny pack
You rocked it, bro.
He did, dude.
That's
He
right,
was
Tori. Everyone hates
dressed like a
taxes.
ridiculous tourist. At
Everyone
the
hates
Great
taxes.
As
Western.
soon as you
So
get that home warranty, if it's an investment property, make sure you hit us up at homewarddfw.com to
Ding,
manage
ding,
that
ding.
bad boy for you.
Let's go.
Because we are doing our best. And it's working. Homeward.
That should be the tagline. Homeward DFW Property Management. We are doing our best at managing your
We're
property.
doing it, honestly. It's like,
doing
it's like
our
the
best.
flight attendant's motto. We're just doing our best. We're trying to get
look,
to A to
guy,
B.
look, yeah.
That was-
We're not even getting paid yet until we push off from here. So
exactly.
And I'll
which
make
is
this
true.
personal vow, and I haven't even seen the video, but whatever video we have of Mortgage Mike for the next 10 people who send him an application and say they came from the only real estate, we will 100% play
Did
embarrassing
Kelderman just
shit
become
about
a
Michael
real
the Backer.
businessman?
We will
my gosh.
100% play silly shit on the backer
Just
all day
straight
long.
monetize that. I
it.
love
That's
it.
it. Otherwise, you don't
Yes.
get to see.
you send him a referral, you get the video.
Give us
The
proof of
video.
referral. I will send you the video and the context.
Yep.
Which is much better than the video itself. The video is actually great.
Mortgage
It's
Mike,
amazing.
mortgagemikeoftexas.com.
Do you think that anybody between the years of like 2001 and 2005 actually came to closing dressed as a ninja?
For sure somebody did.
That would be so stupid.
Dumb
and funny.
marketing's been
Are you
happening
still on
forever.
the? You're still on the ninja.
I thought that earlier. I didn't get the chance to say it. Okay,
Toss up that
Give me a
hypothetical.
question,
All right.
but okay. Is this what was the no? Okay, no. Can we do above?
You want to do that? I told.
No,
man.
the one right above because we were
What
talking about
hero
this
would
earlier.
you choose to fight against
No.
Iron
Okay.
Man?
No. I don't even want to talk about that specific question. Okay, you explained this to me before.
Do you think you could take a monkey? Are we doing this one again?
No.
No.
One, I 100% could, but no, just because I have reach. But we,
Not
and I
like a
don't want to
gorilla.
get into that, but I totally could. No, we were talking this. Okay, so Jarvis was a program we use, and okay, so Jarvis turns into a different Avenger. I just realized how much a lack of fucking Avenger knowledge I have, and it appears like I'm like the only dude who doesn't know about the Avengers. So Jarvis becomes a different superhero.
Jarvis doesn't exist.
Okay,
Like
But
Jarvis,
he does.
like, I mean, like,
No, he
Vision-
does.
He's an
Jarvis,
AI computer.
Jarvis is the AI computer thing.
okay, he's
Right?
Iron Man's AI computer.
Yeah, and then that mixes with the Tesseract that Loki stole on his little staff thing, the little
Okay.
square deal that they were fighting for in Captain America against Red Skull in the very first Captain America.
Didn't see that one either.
Right? So they do that. So they have a Tesseract. Iron Man decides to get with Bruce Banner.
Like which way?
the Hulk. I know that's
Yeah, the Hulk.
Okay,
So they take the Tesseract and they try and like they mix it with Jarvis, and then it becomes Ultron, right? I think that's the thing. And then when they kick Ultron's ass, from the ashes rises Vision.
oh, so Jarvis ended up kind of being bad
Jarvis
for a
and
while.
the Tesseract
Kinda.
became Vision,
But
right?
for a second,
So-
Jarvis was bad because he sort of became Ultron.
So Ultron was some code that was already existing, and then he became Ultron, and
Okay.
then they created Vision using the Tesseract and whatever.
So I wasn't
else.
that far off.
You
I just
weren't
had
that
the order
far
of it
off.
wrong.
I just,
Yeah.
but you made a very serious claim about he's like the second most powerful Avenger.
I think
He's not
out of
an
the,
Avenger.
up there. He's
The,
definitely
the,
up there.
the ones that we currently have in
Okay.
in the Marvel universe, Thor is probably the only one that is stronger than Vision, and I would even
Thor's
only because
stronger.
Thor's
than,
a god.
Okay, who else is a god?
I mean, out of the current people that are on
Loki.
there right now,
Loki's
yeah,
a god.
Loki, but Loki's dead.
Or is he?
Gods
Or
can
is he?
die. I feel like he's not dead.
He might not be.
Man, that's
Look,
the
if-
problem
if
I
you-
have with these
if you wanna
fucking
get the comic
movies and
books, there's all
stories.
kinds
Is
of
when
bananas
they
in this.
die, they don't ever die. And Hawkeye can only Hawkeye's just the guy with the bow and arrow. Is that what I'm?
Yeah, yeah.
Oh,
He
this
doesn't
is
have-
weakest.
Why do they
Weakest
invite
members.
him?
They've done a really good job in the Marvel Universe now of killing off or sending away everybody who is Earthbound.
Okay.
Notice they're going to move into space now because they got to start fighting. Now we're going to go to Marvel Universe.
you gotta
They're
do
going to start fighting like the insane shit.
Okay. Who's the Scarlet
Scarlet
Witch?
She can
Witch.
control their minds though.
She's badass.
She came in Age of Ultron too.
Okay, so
Scarlet
that you're
Witch came in Age of
by
Ultron, too.
default the strongest because you could just control Thor's mind and make him do hammer stuff.
Well, but can you control God's mind? You know, you like gets down.
And not to mention, she's
so many layers.
Hey,
She's
who's
pretty
1 through
good-looking,
5?
too.
So according to Jesse's website, number 1 is the Scarlet Witch. Give me number 2.
That's
Thor. All right, 3. Captain Marvel.
Yeah,
She's
Captain Marvel.
Yeah,
is
she's in the
legit.
universe. That's
Yeah.
Who's
okay.
that? Is she a god?
She's
No.
she's like an elemental, like universal type of thing.
Yeah.
What is an elemental universal type of
Like
thing?
she comes from space.
Wait,
dude.
are they saying that number one
No,
was more
she's-
powerful than Thor?
Yeah, they're saying
this-
Scarlet Witch is more
This one
powerful
person
than
is
Thor.
this one side I'm looking at is Odin is in fact stronger than
Well,
Who's
Thor's
Odin
dad. That's
now?
Thor's
Odin-
dad. That's
Odin is
Thor's
Thor's
dad.
dad.
because he's the ruler of over Asgardians.
It's played by the same guy who played the fava beans. Who's that
love
fucking guy?
It's Anthony Hopkins.
Yeah, Anthony Hopkins. Anthony Hopkins.
Sir Anthony Hopkins. That is sir to you.
That's who plays Odin in Marvel.
I wish we had that on video.
Well, we do. What a coincidence! We record this show. man.
I don't think. I don't think. Is it on you though? Do we have that?
He had it on the back.
on
Oh,
everybody.
Vision 6, actually behind Hulk. So like,
Okay, so
people
he's-
say
he's
out there,
pretty
Hulk
high
will
up
wreck
there.
shop, dude.
Hulk can rep. Yeah, he can definitely.
And then Shang-Chi, that's a guy?
Shang-Chi.
Now
Shang-Chi's
we're
legit,
getting into
man.
Doctor Strange shit, and then I get lost.
Shang-Chi's the guy from Kim's Convenience.
I'm
which is
super
a good
disinterested.
show.
And then
Are they
Captain
saying?
Marvel's-
Are they saying
Yeah.
that Captain Marvel's stronger than Thor?
Yeah.
And then Ant-Man.
Ant-Man, because he can go to the quantum realm and he can do like whatever. The Doctor
Strange
Strange
is pretty
storyline
badass.
bores me to tears. I don't even
So
want to
many
get into
realms.
it.
I don't-
No, the
Okay,
new one's
I just
coming
don't
out
care.
Jesse,
tonight,
can we do
tomorrow?
I'll go back to your question. I'm sorry I asked. Do the other question.
Oh, I thought the
Jesus,
show was
I'm
over
not
now.
getting into the fucking Marvel
not
thing.
over.
All you guys did was
We already
convince me
did.
that I don't want to do Marvel stuff. If you could immediately solve any unsolved mystery in history, what mystery?
You know what it would be? Is
What
who is
mystery
stronger,
history?
Thor or Vision?
Yes.
Yes. There we go. Show over.
Man, if you really could though,
It's probably Thor.
I want to know who shot JFK.
I know.
Who was it?
I don't know.
Thanks for watching the show today. Make sure if you're watching this on Facebook, you head over to our group, the only real estate group we're being a part of, so you can watch the extended conversation. If you're watching this on YouTube, make sure to like, subscribe, and hit that notification bell. And if you listen on the Apple Podcast, leave us a review. We'd really like it. So just do it. Do it. Do that over there. Go to this one. And then go to that one. Thanks.